Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, January 13th, 2025. So we saw a little bit of seesaw today. Early trading, there was some selling pressure, and then from there we kind of found some support and then rallied and closed plus 9 points. So the lows here were all the way down at 57.70, so that's 60 points higher than where we closed. But in any case, if there's still need, I would not be surprised to see the 56.67 test it, and if that gives way, then down to the 55.82 and then the 54.90. So these would be the downside targets that I'd be really interested in buying. Now, I do believe that we're setting up for some type of bounce. You can see on the daily chart here that we have some bullish divergences. And if we look at the 60-minute chart, you can see that we had some divergence. I mean, you can say that we have them. Hang on one second. Let me just clear these off. So we can say that we have some bullish divergences if we're actually going to be going from here. But really, the thing is, I think they're really from this area. So if we see another move to the downside, that's where, we're going to probably get those bullish divergences and get a larger move to the upside. But right now, I wouldn't be surprised this 58, right around this, I would say the 58, the 70 level. So about 35 points higher. Or actually 40 points higher, 42. That's going to be resistance right here. And then on top of that, if it gets above it, then we're looking at the 58.86 as the next resistance level. And we have to remember we have this open gap. So this is why in the morning notes I said I'd be pretty cautious shorting blindly this open here, because the market's really been getting beaten up pretty good, and typically when we get these types of moves and we rally back, usually they continue up, and I wouldn't really be ruling out some kind of move coming up to somewhere up into the 59.29 level. That will close this gap. That will be the resistance, and most likely we'll see the moving average, the 200-day, come here, and this will be the resistance area. But right now, obviously, what the bulls are going to have to do is really defend these lows, because if we lose these, that's when we're coming down somewhere into the 57.26 level. Or we just look at some of these right here, the 57.67. So that would be, where I'd be very interested in buying it. And on the upside, I'd be starting to scale out of it. If you're in any long position, just scale out up in this area here, and you start building short positions. But right now, I still think that they're going to try to trap some bears. And if not, then we're probably heading down to this 57.26 level, and that's where I'd be looking to be a buyer from there. So we've seen nothing but a series of lower lows and lower highs. So if the bulls can get above this 58.70, that will be the first higher high from this rally that we would make. And again, we're looking at some resistance right in this level here. So I'm staying open-minded for tomorrow. Again, I wouldn't be surprised to see a gap higher open. I don't really have any rhyme or reason for it, but just the way that we rallied off of, we finished at the highs towards the end of the day is kind of telling me that we have some more upside to go. So let's see what plays out tomorrow. The fund, we did pretty good today, made almost 4,000. It was a quick trade. Again, they had risk in it, so it's one of the ones I did not put in the room, just because I'm really looking for just the very conservative type condor trade. So let's see what plays out tomorrow. Have a great night, and I will talk to you guys in the morning.